Hey, it's Thursday, July 7th at 10:52. This is just a few examples of a signal that I look for called RSI divergence. And it has a lot of meaning when you find it on a support level, resistance level, or a trend line. For example, this is the bund. This is yesterday. This here is a key resistance level during the last 2 weeks, and as we touch that level right there, we have 7% bearish RSI divergence. So as price is going up, RSI should be going up, but it's going down. It's diverging at 7%, and then we sell off 30 ticks. In the S&P, we have this morning we have this little series of higher highs, and we have 7.6% bearish RSI divergence, and that was the first bearish signal. So it really indicates a reversal just above the trend line, and we sell off 5 points. This is the euro dollar today. This is a 5-minute chart. This here is a key daily trend line. It started from the low of 2010. There's no RSI signal divergence in the 5-minute, but if we switch to the 1-minute chart, there is a huge signal. It's 12%, if I remember correctly. So there's we're back here. There it is there. That's the low. That's the trend line. The first RSI is 18%, and then we're up to 25%, so it's 6%. And I found by backtesting that more than 5% predicts a reversal. So we have a bullish divergence. We're tagging the daily trend line here, and that gives you an indication that we're going to bounce, and we bounce a good 50 points. So if I zoom out and I show you a daily trend line, and that's why we bounce, because of the daily trend line. And these are daily candlesticks. So this is the low 2010, and we catch right here. We trim the wicks out of January. There's a tag here, and there's a bit of messy interaction there. Gold, one more nice example, and I traded this one too. See, you expect a reversal on a trend line, and RSI is a leading indicator that predicts a reversal. So the two signals that go hand in hand. We have a little trend line resistance intraday 1 to 3rd contact, and then we have 4.5% bearish RSI divergence. And I took a short right here, but then I reversed it to a long and got stopped at. It was just really stupid. But I like the idea that we have a lower trend line support that I took off. But when you have a bearish RSI divergence, then when you cross the channel, there should be a trend line here. When you break the lower trend line, that's a good entry point. You got to wait for the candle to close on the trend line. So, simple strategy for confirmation of a trend line break. Here's my trend line. I just added it. 1, 2, 3, 4th contact. You got to wait for the first candle to break the trend line and close, and then you enter short 1 tick below the close of that trend line. So you would have entered right there, and that's worth $5. So that's 4 nice RSI signals on trend lines, which, if you can spot them, it's a high probability entry point that gives you a tight stop.